Okay. All right, let's go to the next one. We are first-time home buyers. I've seen a lot of these lately. First-time home buyers. And we want to use our VA home loan, but we don't understand the funding fee. Can anyone explain this to us?
The funding fee for non-disabled veterans is a part of the process, and essentially maybe it's not the proper definition, but I like to see the funding fee. I like to explain the funding fee as an expense, part of the transaction that's financed in the loan about 99% of the time. That's designed to help sustain the loan benefit for future veterans and future opportunities down the line. It's what the funding fee itself is what essentially allows you the opportunity to have no down payment, lower rates, more forgiving underwriting criteria, no PMI, and if there is a service-connected disability or you're receiving compensation, then you're going to be exempt from that. But it's nothing to be fearful of. It's nothing to say, oh, gee, I don't want to do VA because I have that. We've looked at the statistics. We've looked at the math. A loan with a funding fee, VA, compared to other loans without the funding fee but higher rates, always works out for your best interest.
Right now, if you're receiving disability compensation from the VA, which is about 45% of the population of veterans that are utilizing the benefit, are exempt from paying that funding fee. But it also is important to know, and Rick was spot on, it is what allows VA to operate. This is not a 100% guarantee program. It is a program that we partner with lenders for them to provide from a delegated authority standpoint. That funding fee helps supply the program to the industry. So that's really the best way to look at it. It's a one-time fee. It's not monthly. Which is what you would have from a mortgage insurance standpoint. If you look at FHA or other programs that are little to no down payment. So take all that into consideration when you're looking at your options. But when you factor the funding fee into those other options, I think you're going to find that it's a small price.
And real quick, if you've been ETS'd out, you're not disabled, and you have paid that funding fee, before you close on your home, before you close on the home, consider filing for a service-connected disability claim, because if you're approved after you close on the home, in other words, your service-connected disability claim is subsequent after the closing, you can have the funding fee refunded too, through the refund process.
If that claim is started before you close.
As long as the claim is filed prior to consummation of the loan, correct.